Let's just start out with a broad question on, the extent of how much activity has taken place in the first half of this year, and what has been the main driver. In your view, is it simply just a bounce back from the pandemic lows in activity we had last year, and the fact that interest rates are so low, so many companies are looking to take advantage of that before we start hearing about tightening or tapering or withdrawal of monetary policy accommodation at this point?
Yes, good morning. I mean, very clearly, those two factors are important. The pent-up demand from a rather depressed, certainly first half of 2020. We're still seeing that play out. I mean, the $3 trillion figure for the first half of 2021 that you mentioned, I mean, just to put that in some kind of perspective, in the second quarter alone of 2021, we've had $1.6 trillion worth of deal activity worldwide, up 225%. So clearly that pent-up demand still playing a huge part. Let's also look, though, at the dry powder that's available. I mean, we're still seeing, what, 2.5, maybe $3 trillion worth of private equity and venture capital dry powder sitting there, in addition to which 1 trillion in SPAC dry powder. That's to say not just the equity that's raised, but the possible leverage on it. Putting together that 4 trillion, there's a lot of money that has to be put to work. And speaking of leverage, as you quite rightly mentioned, the financing environment remains benign. I think a lot has been talked about in terms of the inflation risks from various government spending measures, particularly, of course, in the US and Europe. But it has to be said that the financing environment remains benign. And if we take a look at what, for example, Augustin Carstens, the big man of monetary policy in every conceivable sense, has said, too early to worry about that, but it's certainly the only observable risk. Why not get your deals done now before that tide turns?
I mean, $4 trillion sitting on the sidelines is an astonishing amount of money. We were just before you came on, Karen and I were talking about this potential Morrison's deal and the fact that you've got multiple private equity firms coming into the fray now, and somewhat of a bidding war is emerging. And of course, this is just one case in point. There have been many other cases of bidding wars going on. What is happening to the general clearing prices for these M&A deals? Are you also seeing a trend higher in overall premia associated with the deals that are actually going through because there is so much demand at this point?
It goes without saying. I mean, if you look both at the premia and also the EBITDA valuations as well, no doubt that they're only going up. I mean, it's very interesting, of course, that you've got so much overseas interest in Morrison's. If we look at Europe overall in the first half of 2021, the inbound investor wave has enjoyed a remarkable run. I mean, 6 of the top 10 deals in Europe so far this year have involved an overseas investor, and inbound overall is at a kind of an astonishing high of $182 billion versus $87 billion in the first half of 2020. As I say, the demand is incredible, and I think that it's particularly of interest. If you look at that huge amount of capital that I was just talking about, a lot of it has been US focused. It'll come as it's news to no one that, of course, most of the SPAC raising activity has taken place in the United States, but that's getting quite a crowded market, and so that increasingly some of that US capital is looking across the pond to Europe. Particularly, it has to be said from the SPAC perspective in terms of tech. The data encryption, UK data encryption company Arcit, of course, taken out by a SPAC. Similarly, in the UK, the software company Wejo. But yes, it's very clear that the take private wave is only going one way. You look at Morrison's, and you can see why, especially with the sale and leaseback possibility that you evoked just a moment ago, why there'd be such a tussle over it.